Hitting $250,000 invested doesn't sound as exciting as $1 million. It doesn't feel like a huge milestone from the outside. But here's the truth. This is where things actually start to change. Because before this point, everything feels slow, like you're putting in effort, but not seeing much in return. But once you reach this level, you start noticing something different. Your money begins to move, not dramatically, but consistently. And that consistency is what makes it feel real for the first time. Up until this point, most of the work was you saving money, staying disciplined, making sacrifices, showing up again and again. But after $250K, it's not just you anymore. Your money starts contributing, not replacing your effort yet, but supporting it. And that small shift feels bigger than it sounds, because now you're not alone in the process. Another thing that changes is your motivation. Before $250K, progress feels slow, sometimes even invisible. You question if it's working, if it's worth it. But now, you can actually see results. Your portfolio moves more. The numbers feel meaningful, and that visible progress makes it easier to stay consistent without forcing it. At this level, you start trusting the process more because you've seen it work. Not just once, but repeatedly over time. And that experience removes a lot of doubt. You stop second-guessing every decision. You stop chasing new ideas constantly. And instead, you focus on doing the basics well. Let's talk about compounding. Before $250K, it exists, but it's not impressive. It feels slow, almost invisible. But now, it starts becoming noticeable. You might see your investments grow, even in months where you didn't add much. And that's when something clicks. You realize your money can actually grow on its own. And that realization changes how you think about everything. Another shift is patience becomes easier. Before, you're always thinking about speed. How fast can I grow this? But now, you've seen progress. You've seen results. So you stop rushing. You stop looking for shortcuts. And instead, you let time do the heavy lifting. At this stage, mistakes feel different. Earlier, a mistake didn't seem like a big deal because the numbers were smaller. But now, you're more careful because your portfolio is bigger. And even small percentage losses feel more real. So you think more before acting. You slow down decisions. And that awareness protects what you built. You also start simplifying things because you realize something important. You don't need complicated strategies to win. You don't need to chase trends. What actually works is consistency. So instead of adding complexity, you remove it. And that simplicity keeps your growth stable. Another change is how you see risk. Before, you might take chances, trying to grow faster, testing things. But now, you think differently. You protect what you built because getting to $250,000 took time, effort, discipline, and you don't want to lose that. At this level, you start thinking differently about money, not just earning it, but growing it, because now growth becomes more powerful than income alone. You realize money working for you matters more, and that mindset shift is what separates savers from real investors. You also notice something interesting. Market movements feel bigger now because your portfolio is larger. A small percentage change translates into real money, and that makes you more aware, more engaged, more focused on what's happening. At this stage, you start thinking long-term naturally, not because you're forcing it, but because it makes sense. Short-term thinking feels pointless. You've already built momentum, so now you focus on extending it, growing it over years, not days. Another shift is confidence becomes quieter. You don't feel the need to show it. You don't need validation because you know what you've built. You've seen the process work. And that quiet confidence feels stronger than external approval. You also become more consistent, not because you're trying harder, but because it feels natural now. Saving, investing, staying disciplined, it becomes part of your routine. Something you don't even think about anymore. At this level, You stop comparing yourself as much because you've built something real, something meaningful. You stop looking sideways and start focusing forward on your own progress, your own system, and that focus helps you grow faster. Another change is you start valuing time more because now you see what money can do. You realize it can create options, freedom, flexibility, and that makes time more valuable than before. You also begin to think in systems, not just actions. You create structure, automatic investing, clear rules, defined decisions, and that removes stress because you're not guessing anymore. You're following a system that works. Another important shift is emotional control. You stop reacting to every market move because you've seen ups and downs before. You understand volatility. So instead of panic, you stay calm. And that calmness protects your long-term growth. At this stage, you realize something simple. Consistency beats intensity. You don't need big moves. You don't need risky decisions. You need steady progress. And that mindset keeps you moving forward without stress. So by the time you hit $250,000 invested, everything doesn't change instantly, but it shifts. Your mindset changes. Your confidence improves. Your strategy becomes clearer because now you're not starting anymore. You've already built momentum, and that momentum is what carries you forward from here. After $250,000 invested, you start noticing something important. Your money begins to work for you, even when you're not actively thinking about it. This is when the real magic of compounding starts becoming apparent. Your portfolio begins growing with less effort from you. At first, it might seem slow, but trust me, once you get used to seeing your portfolio grow consistently, you realize that momentum has kicked in. It's not just about adding more money. It's about allowing your previous efforts to multiply. This sense of growth feels different. You've passed the point where you're only saving or contributing. Now, your money starts creating more money. At this level, your focus begins to shift. Before $250,000, you might have been obsessed with reaching that first milestone. It was all about numbers and the grind. But now, you're thinking less about the next dollar and more about maintaining the momentum you've built. You start focusing on preserving your gains and allowing your wealth to snowball. This change in focus brings a sense of control. You're no longer driven by panic or fear of missing out. Instead, you're building a system that works for the long term. Your focus has shifted from chasing wealth to creating sustainable growth. One of the biggest changes you'll notice is in how you react to the market. In the early stages of investing, every market dip could send you into a panic. You'd ask yourself, am I doing this right? Am I losing everything? But after $250,000, you've seen these fluctuations before. They're no longer a cause for panic. Instead of reacting emotionally, you begin to approach market movements strategically. A dip isn't a disaster, it's an opportunity. You now know how to ride out market fluctuations with confidence. This mental shift gives you a huge advantage. You're now playing the long game. At this stage, you begin to appreciate the power of small percentage changes. Before $250,000, you might have viewed a 5% return as minor. But now, a 5% growth on a larger portfolio means real money. And that's when you realize the importance of compounding in a whole new light. When your portfolio hits the $250,000 mark, even modest returns add up. This is the sweet spot where small, consistent gains can lead to significant wealth over time. It's no longer about hitting home runs. It's about building a foundation that pays off steadily. Compound interest is now your best friend. Now that you've reached $250,000 invested, something else happens. Your consistency becomes even more valuable. When you were just starting out, you probably focus on the thrill of making big decisions or getting instant results. But once you hit this milestone, consistency becomes your key to long-term success. You begin to see that the real work is staying on track, regardless of the market's ups and downs. This commitment to consistency isn't just about following your investing plan. It's also about sticking to healthy financial habits, living within your means, saving regularly, and avoiding impulsive financial decisions. With these habits, you start to build a predictable path to wealth. Another shift you'll notice at this level is how you view risks. At the $250,000 level, you're no longer willing to gamble. Instead, you start to prioritize protecting what you've already built. You understand that every risk needs to be calculated, and that taking unnecessary chances can put your wealth at risk. You'll start thinking more about the downside. While you may still pursue growth, you do so more thoughtfully. You'll seek to minimize unnecessary losses, and that mindset starts to shape every decision you make. It's not just about making money. It's about keeping it safe, too. You begin to understand something that might have eluded you earlier: the importance of your income streams. Before hitting $250,000, you might have thought of income as just a paycheck. But once you hit this milestone, you realize that your investments are now part of your income, too. You start thinking about your money as working for you, bringing in more revenue, dividends, or capital appreciation. This shift makes you realize that financial independence isn't just about earning. It's about making your money work 24/7, and it gives you an entirely new perspective on your future. At this level, your approach to mistakes changes as well. In the beginning, mistakes felt like a big deal. But now, you understand that making the right decision is important, but so is learning from the wrong ones. At $250,000, the stakes are higher, but your ability to bounce back from mistakes is stronger. You stop viewing mistakes as failures and start seeing them as part of the learning process. This shift allows you to take more calculated risks, knowing that not every decision has to be perfect. You also start valuing your time more. At this point, you realize that money isn't just a tool to buy things. It's a tool to buy time. Time to do what you want, when you want. This is a huge shift in perspective. Now, with $250,000 invested, you can start thinking about how to spend more time on your passions, your family, or other things you care about. You're no longer just hustling to make money. You're hustling to free up time, and that freedom is priceless. At this stage, you start thinking long-term naturally. You've learned that success isn't about quick wins, but steady, long-term growth. You've seen the power of sticking with an investment strategy over time, and it's paying off. Now, you focus on building something that will grow for years. And that shift in mindset is incredibly freeing. Instead of constantly worrying about the next market crash or downturn, you start to view those moments as part of a bigger picture, and that gives you peace of mind. Your mindset changes once again when you realize that your goals become clearer at this point. Before $250,000, you were probably still figuring things out. But now, with $250,000 invested, you can see your path more clearly. You know the steps you need to take to get to the next milestone, and the one after that. Your vision starts to sharpen. You're no longer confused by the noise. Instead, you have a clear direction. This clarity gives you confidence and helps you make decisions that align with your long-term financial goals. At this level, you start seeing opportunities differently. Before $250,000, you were chasing every opportunity that seemed to have potential. But now, you approach opportunities with more scrutiny. You start to value quality over quantity, understanding that not every opportunity will move the needle. You've learned to assess risk and reward carefully, and this shift in thinking allows you to make more calculated decisions rather than jumping at every chance. Opportunities will still come your way, but now you know which ones are truly worth your time and effort. At this stage, you stop making decisions out of emotion. Earlier, fear and excitement played a big role. You'd react quickly, sometimes too quickly. But now, you slow down. You think things through, because you've seen how decisions play out over time. You understand that one bad move can undo months of progress. So instead of reacting, you respond with logic, with patience. And that shift protects everything you've built so far. You also start respecting discipline on a deeper level, because now you've seen what it can do. Getting to $250,000 wasn't luck. It was consistency. It was showing up even when you didn't feel like it. And that realization makes you trust discipline more than motivation, because motivation fades, but discipline keeps everything moving forward. Another shift is how you view progress. Before, you wanted fast results. You wanted visible growth. But now, you understand something different. Real progress is quiet. It doesn't always feel exciting. Sometimes it feels slow, but it's consistent. And that consistency is what builds something real over time. At this level, you also become more selective, not just with investments, but with everything, where you spend, what you buy, what you commit to, because you understand every decision has a cost, not just money, but time and energy too. And that awareness helps you stay focused on what actually matters. You also begin to trust yourself more because you've gone through the process. You've made decisions. You've seen results. And that builds confidence. Not loud confidence, but quiet certainty. The kind where you don't need validation. You just know you're on the right path. Another important change is your relationship with money. Before, money felt like something you needed to chase. Now, it feels like something you manage, something you guide. And that shift changes everything. Because now, you're not reacting to money. You're directing it. At this point, you realize something simple but powerful. You don't need to do more. You need to keep doing what works. Because trying to do too much often leads to mistakes. But staying consistent builds results over time. And that understanding keeps your progress stable. So by the time you're solidly past $250,000, everything feels different. Not because you're rich, but because you've built momentum. You've built discipline. You've built understanding. And those things are what actually create wealth. Because from here, it's not about starting anymore. It's about continuing. And continuing is where real growth happens. At this point, you start realizing something deeper. It's not just about reaching numbers anymore. It's about what those numbers represent. Discipline, consistency, time. Because $250,000 isn't built overnight. It's built through repeated decisions. You might have made mistakes, but you learn from them, and that's the key. And when you recognize that, you start trusting yourself more, not just your money, but your process. You'll also feel like you've reached a stage of maturity in your investment journey. You'll understand that you don't have to prove anything anymore. You've already shown you can do it. It's now about maintaining that momentum and watching it grow. You also begin to feel more stable. Not rich, but grounded, because you know you have something behind you, something that's growing, and that stability changes how you think. It's no longer about the short-term ups and downs. You don't feel rushed anymore. You don't feel pressured to prove anything. You move at your own pace, and that's liberating. The frantic chase of the earlier stages gives way to a steady, calm assurance that you are on the right track. This stability becomes one of your greatest assets. It allows you to think clearly and make decisions without the emotional noise that used to surround your financial decisions. Another shift is that you stop chasing fast results. Before $250,000, everything felt urgent, like you had to make fast decisions. But now, you've seen the power of slow growth. And you realize that slow, steady progress is actually what wins in the long run. You begin to see that it's not always about making fast money. It's about building a foundation that lasts. That shift in mindset is what allows you to let go of the need for constant validation. You've shifted from a mindset of quick returns to one of long-term wealth creation. Now, you can sit back and let time do the heavy lifting for you. At this stage, you also become more intentional with your money, your time, and your decisions. It's no longer about making as much as possible, but making the right decisions. Every financial move becomes deliberate. Whether it's investing, saving, or spending, you begin to ask yourself, what's the best use of my resources? You also start thinking in terms of long-term value, not just immediate gratification. You no longer seek short-term pleasures at the expense of long-term gains. Every dollar spent now feels like it needs to contribute to a bigger picture. This shift in thinking positions you for greater financial security and success. As you begin prioritizing what truly matters to you, you start thinking in bigger time frames. Not just years, but decades. What does this look like in 10 years? What happens if I stay consistent for the next 5 years? These questions begin to shape your actions. Every decision you make now has a longer-term perspective. This shift allows you to make wiser financial decisions and avoid getting distracted by short-term temptations. Instead of focusing on what's right in front of you, you start focusing on what your money will look like in the future. And by doing this, you lay the groundwork for generational wealth. Another important realization is that growth becomes predictable, not guaranteed, but expected. You've learned to trust the system. You've seen how your consistent contributions and disciplined approach have resulted in steady growth. Now, fluctuations in the market don't seem as intimidating. You understand that market cycles come and go, but your strategy remains. Your wealth begins to grow in a more systematic way. You know that steady incremental growth is more reliable than hoping for the next big win. You trust in your process, and that trust leads to even more confidence moving forward. You also start valuing control more, not just over your money, but over your decisions. The more you invest, the more you realize that control over your decisions is what leads to real financial stability. While the market will always have fluctuations, your ability to maintain control over your personal habits, discipline, and mindset is something no one can take away from you. This control also empowers you to avoid getting distracted by shiny objects. You become more selective about where you put your resources, and every decision feels like it's aligned with your long-term vision. That focus is a game changer. At this level, you no longer need constant reassurance. You've learned to trust the process, and your financial confidence has grown. You don't check your portfolio every day, and market fluctuations no longer shake you. Instead of reacting to every little change, you've learned to play the long game. You understand that fluctuations are just noise, and they don't affect the bigger picture. You've done the hard work already, and now it's just about continuing the path. That calmness in decision-making will be key as you grow your wealth further. Another shift happens when you begin to focus on sustainability. You've seen what fast growth can do, but now you understand that maintaining your wealth is just as important. You focus on building a sustainable financial strategy, one that doesn't require constant effort, but grows steadily. Sustainability is what allows wealth to last over generations. It's about minimizing risks, keeping expenses low, and avoiding flashy investments that may not stand the test of time. You'll start prioritizing your financial foundation to ensure your wealth continues to grow long after you. At this point, you understand something crucial. You're no longer starting. You're building. Starting feels uncertain, chaotic, and unpredictable, but building feels controlled, focused, and secure. It's the difference between having a plan and not having one. Once you've hit $250,000 invested, the mentality shifts from how do I get started to how do I make sure this grows and stays protected? Now, you are a builder, not just a dreamer. This sense of control and direction allows you to push even further toward your next milestones. You also begin to simplify your life, not because you have to, but because it makes everything easier. You stop chasing every new investment trend or trying to optimize every little aspect of your finances. Instead, you find clarity in simplicity. You understand that wealth doesn't need to be complicated. You start removing distractions, both financially and emotionally, and focus only on what truly matters. Simplify your approach to life and money helps you conserve your energy and ensures that your financial journey remains peaceful. Another realization at this level is that money becomes quieter. It's still working for you, still growing, but it no longer has the same hold over your thoughts. You're no longer consumed by chasing after more. Instead, you focus on enjoying life, on living freely with the wealth you've built. Money becomes a tool for freedom, not just a goal to be reached. The more you let go of the constant hustle and focus on the life you want, the more aligned your wealth will become with your true desires. At this point, you begin to think about the next level, not out of pressure, but out of curiosity. What does $500,000 feel like? How different will things be? And that curiosity starts guiding your decisions. You don't rush toward it. You don't force it, but you become more aligned with it. Your habits sharpen. Your focus improves. And slowly, your actions begin matching that next phase. Because now, you're not just growing, you're preparing. You also begin to appreciate patience on a deeper level. Not just understanding it, but actually feeling it. Because you've experienced what waiting can do. You've seen growth happen over time. You watch small numbers turn into something meaningful. And that experience makes it easier to stay patient, even when things slow down, even when nothing exciting is happening. Because now you know progress doesn't always feel exciting, but it's still happening. Another shift is you become more focused on direction, not speed, because speed can trick you. It can make you feel like you're progressing when you're actually not. But direction tells you where you're going. So instead of chasing fast gains, you focus on staying aligned, on making sure every step moves you forward. And that clarity keeps you from making unnecessary mistakes. At this stage, you also start thinking more about protection, because now you have something real to protect. Before, it was about building. Now, it's about maintaining and growing safely. You think about risk differently. You avoid unnecessary exposure. You make smarter decisions, because you understand keeping what you have is just as important as growing it. You also realize something simple. You don't need to do anything extraordinary. You don't need complex strategies. You don't need constant changes. What got you here still works. Consistency, discipline, patience, and that realization removes a lot of pressure, because now you're not searching for answers. You already have them. Another change is your confidence becomes internal. You don't need validation anymore. You don't need to show results, because you've seen your own growth. You've experienced your own progress. And that belief is stronger than anything external. It keeps you grounded. It keeps you focused. And it keeps you moving forward without distraction. At this point, you understand something clearly. Wealth is not built in big moments. It's built in small, repeated actions, day after day, month after month. Nothing dramatic, nothing extreme, just consistency. And once you truly understand that, you stop overthinking. You stop trying to do too much. And you focus on doing the right things, again and again, because that's what creates real results. So when you hit $250,000 invested, everything doesn't suddenly change overnight. There's no dramatic moment, no instant transformation, but something important shifts. Your mindset becomes clearer. Your decisions become sharper. Your confidence becomes stronger, because now you're not just trying anymore. You've already proven to yourself that you can do this. And from this point forward, it's not about starting. It's about continuing, because continuing with discipline, with patience, with clarity is what turns $250K into something much bigger.